Currently, in my stock portfolio, I have 15 different companies that I'm invested in. However, Nvidia now makes up for over 40% of my entire portfolio. It's by far the largest position I've ever had in my portfolio in a dollar amount, and even as a percentage, it's still the largest I've had in very many years. But in today's video, I want to talk to you guys about why I think Nvidia should be priced at between $225 to $250 per share. I'll tell you about why the range is included, because some things have to go right for Nvidia. See, for the most part, everyone understands NVIDIA's bull case. As AI goes from generative to being able to be agentic, meaning that they're taking their own actions and actually fulfilling out roles on the internet, and then even further into physical AI, where we start to get things like autonomous vehicles and general robotics, all of these things require GPUs, which then furthers out the amount of customers that they're selling to. NVIDIA sees 100 million autonomous vehicles on the road, billions of humanoid robotics, even more in specialized robotics in 10 million separate factories, all to manufacture products, deliver them to our doors, and then the robots to help unpack to make our lives as easy as possible. All of that is very futuristic, but what I believe is that Nvidia deserves $250 in 2025, and let's explain why. First up, we saw Asia's goods exports, where Taiwan ends up exploding in the amount of growth, breaking out in this orange line here, with a very exciting export on that list: semiconductors. We saw further evidence from TSMC, the actual manufacturer of the really highly specialized chips that NVIDIA sells for their data centers, ended up seeing a 22.2% increase month over month from March to April, and about a 48% increase year over year. When tracking the results over time before, 48% shows off to be an extremely aggressive growth rate. And that was for April, technically Q2 of 2025. Yet TSMC has already reported on Q1, already showing off big beats in both revenue and EPS. In order to hit these really high surprises on their sales numbers, they have to be selling, and their largest customer is Nvidia. So in this quarter that's already been reported is the same quarter that is going to be reported for Nvidia going forward. And yet they expect this to get even better. TSMC sees that AI chip revenue is set to double in 2025. They said, other than China, the demand is still very strong, especially in the United States. And so we're confident that we're going to be able to double our AI revenue going forward. So if you think about how this affects Nvidia, about 90% of their total revenue comes from those AI chips. If this is set to double, it is going to greatly outperform expectations from Wall Street. Now, that's probably not going to be the case. There is some headwinds for Nvidia right now being able to sell to China, but potentially even this is getting cleared up. Trump is going to scrap Biden's AI diffusion rule, which is a big win for Nvidia, as the world was essentially split into three separate tiers: chips that could be sold without regulation, chips with minor regulation, and then chips with very restrictive regulation on the types of chips that could be sold over to those other countries. Now, to be fair, it wasn't even just chips, it was all AI infrastructure, including software. So this was actually going to be very, very cumbersome for a lot of the tech investors to try to get their heads around. Luckily, it was scrapped, but being reworked. So potentially we could see some more headwinds into the future. Nvidia nonetheless said that this was a great first start. With the AI diffusion rule revoked, America can have a once in a generation opportunity to lead the next industrial revolution and create high paying US jobs, build new US supplied infrastructure, and alleviate the trade deficit. And this idea was doubled down on during a recent Senate meeting where a bunch of the high ranking AI executives had recently said that they want to increase US exports in order to continue to maintain their large lead in this area. See, the number one factor that will define whether the United States or China wins this race is whose technology is most broadly adapted in the rest of the world. The lesson from Huawei and 5G is that whoever gets there first will be difficult to supplant. Currently, the United States is by far in the lead in artificial intelligence. And if we take a step closer on who is actually supplying this growth, it's Nvidia. As the demand is off the charts, like Sam Altman is saying here for ChatGPT, that if anyone has GPT capacity in 100K chunks, please give us a call. This happened on April 1st in the same quarter that Nvidia is just about to report on, which actually brings me to another public company, and I promise you I'll close this gap here. But CoreWeave ranks number one in AI cloud, and Nvidia actually holds a 6% stake in this business, okay? It was ranked number one across all of their peers in semi-analysis cluster max rating, holding a tier of its own across any of their other competitors. And Sam Altman from ChatGPT recently just signed a $12 billion 5-year deal with CoreWeave. And I'm going to be streaming their first ever live quarter as they just recently became a public company on May 14th. So keep an eye out for that. But so far, all we're seeing from them is a ton of demand as they continue to have to raise debt just to go out and buy more GPUs to actually fulfill the demand that they're seeing from customers. See, even past their growth being explosive, I mean, in 2023, we saw 1,300% growth year over year. And then the year after that, another 700% growth on top of that. The reason I bring this up, aside from just Nvidia owning 6% of this business, is that the only products that they buy are Nvidia GPUs. So if experts are ranking you number one across any of their peers, you're growing gangbuster speeds, you need the best products that are installed at the fastest rates. Of course, the only GPUs that they use are Nvidia. But if you guys want to keep up with Nvidia's earnings calls, TSM's, CoreWeave's even, make sure you guys check out Earnings Hub. It's a free sign up down in the link down below where they'll give you the best earnings calendar along with AI summaries of everything that happened on those earnings calls if you're just a little bit too busy to listen to the entire call. Now, getting back to it, OpenAI is seeing so much unbelievable growth that they have no other choice but to forecast their growth going forward to be matching what they're seeing in demand right now. See, OpenAI thinks that their revenue is going to triple this year to $12.7 billion. And going out to 2029, OpenAI believes that their revenue is going to top annually $125 billion as new agentic AI starts to take over and find new use cases for their customers to love. All of this screams more need for data centers from Oracle, Microsoft, CoreWeave, and their entire customer base is NVIDIA. This is the seeming bear case for all of traditional technology, that artificial intelligence will find a cheaper, more productive way that will replace the old guard. Apple just said that searches through their platform, which actually happens to be Google search, just saw the first decline that it's seen in company history. This is really scary for companies like Google, but yet really positive for a company like Nvidia or OpenAI, where they're actually seeing the demand go towards more GPU accelerated use cases. If these 100 billion web searches that usually happen on Google end up happening on places like ChatGPT, that's a lot of tokens and a lot more need for data centers that are going to use NVIDIA chips. Speaking of these tokens that are generated by data centers that are majority NVIDIA, we just processed over 100 trillion tokens this quarter, which was up 5x year over year, including a record 50 trillion tokens just last month alone. And they already have 10,000 organizations that are signing up to use their new agent service to build, deploy, and scale new agents. All of which their lifeblood is tokens, and those tokens are generated on data centers created by NVIDIA. Thank you, Microsoft, one of the largest customers for NVIDIA, by the way. And this is not just tokens trying to replace search. These are a ton of different business models that have all been newly created due to artificial intelligence that are creating hundreds of millions of dollars in annual recurring revenue as it is today. So no wonder Meta, Alphabet, Microsoft, and Amazon continue to heavily invest into these AI chips to then further their token generation to make more revenue for these businesses. And you know what? It says Meta right here is $63 billion in CapEx, but that's actually not true. They want to step it up like the big boys. And instead of being between 60 and 65 billion, they actually upped it to 64 to $72 billion of CapEx spend. Why? Well, majority just to accelerate data center investments. Things are going well, double down on the things that are doing well. And everyone looks at these four businesses as if they're the only customers that are picking up and calling NVIDIA. But there's a new American company that is starting to be potentially one of the largest purchasers of NVIDIA chips. Elon Musk's XAI now is buying up to 1 million GPUs that they want to get finished in late 2025 or early 2026. And that number they're calling is NVIDIA's. But I keep saying American. It doesn't even have to be American. Chinese companies before the H20 ban were picking up the phone and saying, hey, we need to place anywhere between 16 to 18 billion dollars in orders before this ends up closing down. To put that into perspective, their entire last year's sales was just $17.1 billion. Now, I've been pretty outspoken about my disagreements with the H20 ban and why I think that should be reversed. And we have some news on that as well. But first, let's hear from Jensen Huang, the CEO of NVIDIA.
The reason for leaning into the export of this technology is we want to build the world's AI. Whereas American standards are being adopted around the world, the ecosystem of artificial intelligence will build on top of our standard versus somebody else's standard. And we are not alone. You know, NVIDIA, of course, is the world leader today. But in our absence, if we don't serve a particular market, if we leave a market altogether, there's no question somebody else would step in. Huawei, for example, is very formidable, one of the most formidable technology companies in the world. They'll step in. And so the reason why it would make sense is to win in the marketplace, make the American standard the global standard, have AI be built on top of American technology, and of course, very importantly, it's a giant market. When we were limited to ship to China, the Chinese market in a couple of years is probably about $50 billion. The market we've left behind is utterly gigantic. $50 billion, just so you have a feeling for that number, $50 billion is like Boeing, not a plane, the entire company. And that's the business opportunity that I think we could enjoy, bring back tax dollars, create jobs, advance our technology even further.
Now, see, I find this so interesting because it's clear to me that if America then writes that standard for what a chip should be potentially developed on, the software that's written on top of it, that they will have first movers advantage for every new aspect of that technology that gets developed on top, the version 2.0s, the 3.0s, etc. But if we allow Huawei to then potentially step in and be the company that all of the other countries in the world then go to say, hey, we want your most sophisticated chips, America then loses those tax dollars. They lose the jobs and they lose the first movers advantage. Right now, Nvidia has that, and I do not know why at all the government wants to potentially stifle that. Nvidia, nonetheless, does not take breaks. They have already come out with ways to modify the H20 chip for China to potentially overcome these US export controls and then sell back to Chinese cloud customers and get those relationships started back up again. They expect to have this done as early as July. Another thing I want to bring to your attention is, why is it only America or China? Potentially there are new countries that also want to get involved as well. UAE has a ton of money because of their success in oil production. And now they pledge $1.4 trillion investment into the United States for over a decade of AI infrastructure, semiconductors, energy, and manufacturing. This strengthens Nvidia as they found new customers in other parts of the world, but also this also strengthens the United States, which should be good for the government to then give those expedited rights for Nvidia to then sell over to the UAE. But personally, I think Nvidia's demand is even larger than this $1.4 trillion investment. Let's take a listen to this.
Where do you see the demand from different industries?
Well, if you look at where AI is today, as large as Nvidia has been already, and as large as the AI industry is already, we're serving basically the consumer internet market. If you just kind of take a step back for a second, that's the only tiny little sliver of the global economy that we're serving. Above this are healthcare industries, life sciences, manufacturing, the actual manufacturing. In the future, the factory will be one gigantic robot orchestrating a whole bunch of robots inside, working with people to build products that are robotics. So you have robots building robots building robots. And this nested layer of technology is nearly upon us. And so that application for manufacturing, industrialization, plants and factories, and that entire area needs this new AI called physical AI. If we can solve that, we're talking about trillions and trillions of dollars of industries.
Trillions and trillions of dollars. Well, let's see what Donald Trump has to say about this.
And if that happens on top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up.
Now, he was talking about something else, but I think it fits very well. If all of this goes well, you better go out and buy some Nvidia stock, as he says. No, I mean, no financial advice. I'll let the president do the talking on that one. But personally, I think Nvidia is going places. Now, a lot of people think because of run-ups in Nvidia's price over the last 3 or so years, that it is potentially already a very pricey company. What they don't focus on a lot is the growth that has come underneath that, actually making Nvidia one of the cheapest companies that you can buy in the market. If you compare Nvidia to the rest of the Magnificent Seven, this is Nvidia, Tesla, Apple, Meta, Microsoft, Amazon, and Google, what you'll find is that Nvidia is in a price of their own, bringing in 77.9% growth rates year over year as of the last quarter that they've shown off. This is why the line is just a little bit behind, is because every other quarter has reported earnings, okay? But yet All of these other companies are at 16% growth rates and below, all the way down to Tesla at -9%. Maybe Nvidia is slightly more expensive to make up for their larger growth rates than these other businesses. Or maybe the margin that you're actually getting on these companies on a net income basis versus any of these other businesses is still, while growing 78% year over year, is the highest across any of the other Meg 7 names. The next highest not being in the 50s, not even being in the 40 percentages, but 39%, all the way down to Tesla at a 2% margin. But who even cares about net income? It's all about free cash flow anyway. All right, free cash flow margin. Nvidia is at a 39% free cash flow margin. No one else is even in the 30s. Microsoft then comes next at 28%. Amazon being the lowest here at -5%, as their capital expenditures were actually higher than their cash from operations. Tesla, once again, at 3%. And by the way, because these companies are actually facing higher and higher capital expenditures, it is impacting their free cash flows. But the money that they're spending on those capital expenditures is going to Nvidia. Anyway, we need to be more forward looking than this. This is all historic data. Okay, let's take a look at these companies looking forward into the types of growth rates that are expected on Wall Street. This is where we look at the price to earnings growth ratio. Tesla is at a 6.5 times PEG ratio, where Microsoft 2.5 times, Apple 2.49, 1.57 for Amazon, Meta 1.35. Those are all decent ranges. And I can't front anything that is, 1.5 and below. Those are perfectly healthy businesses. However, Nvidia is half of that at 0.75. Now, to be fair, future estimates are only useful if you can accurately gauge future earnings. Well, let's see how they've done. Whenever it comes to all of the 6 other Mag 7 names, they have either missed a few times in their earnings, or, sorry to pick on Tesla here, I've just recently sold this business, that they've only beat 8 out of their last 17 times. Meaning that the PEG ratio of 6.5 times is only based on current Wall Street estimates that are around 50% likely to have been wrong to the downside. Now, companies like Meta, who have missed a few quarters, in the most recent quarters have all been positive. So honestly, Meta is doing very great here. But some of the companies that have missed in recent times are not the ones that should be looked at greatly for their PEG ratios into the future. Nvidia, on the other hand, a spotless record. 100% of the time over the last 17 quarters, they have beat expectations on revenue and continued to increase it. So whenever people look at these estimates, whenever they're looking at price to earnings growth or their sales ratios going out over time, it is only my expectation that it is probably going to be on the lower end, as those expectations from Wall Street are probably going to be undercutting what Nvidia can actually do. But who knows? Maybe competition is heating up for Nvidia. Let's see what Jensen has to say.
Not since IBM in the 60s has a company like us existed, where we come up with a blank sheet of paper, design a brand new architecture, create the chips, create the systems, create the networking, create the infrastructure, write all the software, take that software to the market, have the world's developers and ecosystem develop for that computer, kind of like we develop for iPhones, and you develop for Windows, you develop for NVIDIA. And so not since the 60s and 70s, when IBM built everything from the ground up, has a company like us exist. We build the chips, but we build the entire system, and we're really an AI infrastructure company today. If you look at the systems we build, each one of our chips, if you will, it's 1.5 tons. There's 1.5 tons chip. It's $3 million each. We build these things in very high volume. We manufacture it, assemble it, and then we test it. We use a supercomputer to test the supercomputer, because you have to be smart to test if the computer you make is smart. And so we test everything is liquid cooled, and then we test everything, assemble everything, we disassemble everything, put it on a plane, ship it to wherever the data center is, assemble it again outside their door, put it inside their data center. This entire process has 200 manufacturers and suppliers working with us around the world. We build a couple of $100 billion of it a year. At this moment, we're the largest technology company, chip company in the world, I guess, if you will. And so it's incredibly hard to do. Our R&D budget, per generation is probably about $20-30 billion. And so this is a giant game. But we're working into an industry, Mike, that the the intelligence industry will likely be measured in trillions of dollars. And so the amount of investment that we're making is warranted for the opportunities ahead.
Now, I was picking on the valuation of the Mag 7, but honestly, I think all of those could potentially be great investments. They're some of the cheapest companies in the entire stock market whenever looked at their valuation. And yet, those same companies, including Tesla, are some of the largest companies to benefit from these changes in artificial intelligence. Yet, we have cigarette companies and Walmart and Costco and all of these other businesses that are being priced much higher on multiples of earnings than even the fastest growing tech companies with the highest margins in the entire world. It's a strange time to be an investor, but I think that these things will balance back out. And I think that they'll balance out quick as they start to see increasing capex spend from large tech companies that are all going into Nvidia's pockets, bringing it to a price of $250 a share by the end of the year.